And then there's lots of time, probably be lots of time for questions and answers. But certainly as we're going through this, as I'm going through this, feel free to interrupt and ask whatever questions, either clarification or whatever. It's nice to have some interaction here, as I'm sure most people are aware. So feel free to interrupt me, and we'll try and answer them for you. So record keeping is an important aspect for all small businesses. And if you don't do it, it will probably cost you a lot of angst, time, and perhaps money in trying to sort it out. For large organizations or larger businesses, if you don't do the paperwork or the record keeping, that's usually the first thing that pulls people under. So it's really important to do it, and I'll talk about some options for doing it to maybe help remove some of that stress. And this will apply for everything from a sole proprietor, a partnership, or a corporation. I'm going to assume that most people are sole proprietors, and probably not in an official partnership arrangement, and probably not incorporated. But certainly if anybody is, and things may, Stephen is putting his hand up. Corporation, partnership, corporation.
Corporation.
Okay, all right. So the thing that's going to be different with the corporation from the sole proprietor is that you will need to do a full set of financial statements, meaning the balance sheet and income statement. Most of the rules and the things that I'm going to talk about will apply regardless of how you're organized. What you have to file for taxes is different. So I'll try and quickly point out if it's different for a corporation. And then if there's other questions with respect to that, we can certainly deal with that at the time. So, I mean, some of this seems kind of obvious. Record keeping is recording transactions in an accounting system. And it kind of helps to record the transactions on a regular basis so that you can see what's going on and make decisions perhaps a little sooner than at June 30th when you're filing your corporate tax return, or June 15th when you're filing your personal tax return. And the principles of accounting rely on accurate and thorough records. So it's really, this is bookkeeping, is the foundation of what you're doing for tax purposes, and should be the foundation for your business as well. It helps monitor the success, I want to say, of your business. Could be an indicator when things are going a bit south and you need to do something slightly different. It will definitely help to meet your tax obligations, and definitely gets you through CRA audits, which could happen. Having complete information assists with obtaining bank financing, and that's whether you're doing it on a personal basis, the financing, or on for the business itself. And then it also protects you from your organization from risk. And what I mean by that is if you're not reporting correctly to CRA, there's the potential for penalties for non-compliance, and additional assessments if you can't prove some of your deductions. So if you can get it all kind of set up, you do it once, and then if CRA comes knocking on your door, you just give it to them and they do their thing and hopefully go away. Oops. So how do you keep the records? With the exception of a corporation, and maybe with a corporation you can do it, but it's trickier. You can use Excel. If you just have, fairly straightforward and not a whole bunch of transactions or varying or different categories of transactions, Excel is probably good for one sheet for recording your income, one sheet for recording your expenses. You total them up at the end of the month, the quarter, or the year, as you like. And then you just take that for the tax return. It's fairly simple. If you have a lot more transactions, if you want to do a lot more invoicing, say for clients, or a little bit more complicated, and certainly if you have a corporation where you're required to do financial statements, balance sheet and income statement, QuickBooks Online is my go-to. You can also get desktop. Sage 50 online and desktop are also good. Xero is another online accounting program. It's fairly robust. So unless you're, large manufacturing or a large retail business or something like that, Xero might be a little bit more complicated than you need. QuickBooks Online, in my mind, is really good. Even if you start small and grow, you can grow with it, and it's all online, so you don't need desktop. You can do all kinds of things there. And if you don't like bookkeeping, if that's not your thing, which for artistic type people probably is not necessarily your thing, outsource your record keeping. So, I mean, we provide bookkeeping services. There's all kinds of bookkeepers out there that have their own business that are not necessarily associated with the CPA. I will say you need to be comfortable with them and make sure that they know, what your concerns are, what your issues are, and that they can work through those ones. But there's all kinds of people out there if you pay them, they will do it. Tax implications. So from the taxable income for a corporation, for a partnership or a sole proprietor, you start from your income and expense statement and then make adjustments for what is allowed or treated differently for income tax purposes. So we'll kind of go through a little bit, just an overview of the statement of income and expenses, what are eligible expenses, the limitations, some of the limitations or restrictions on what you can claim or how you can claim it. And then contributing to the CPP or EI program. And this again will only apply for sole proprietor or partnership. And then we'll talk a little bit about CRA. I talk about CRA sort of all through this because that's really why you do the taxes, right? The tax returns. So for a proprietorship or partnership, it is included in your personal tax return. So you pay tax on it. Whatever the net income is, that's what you pay tax on, regardless of whether you take money out of the business or not. So if you spend too much and don't have any for taxes, you're going to be in trouble. Which would be another reason why you want to do this on a more regular basis, maybe monthly or quarterly, just to make sure that you've got enough cash there to look after the tax bill. So what can you claim for expenses? If you're incurring the expense to earn income, that is the purpose of that expense, is to earn income. then you probably can claim it as an expense or deduction for tax purposes. There may be some restrictions on it or limitations on like sort of general business expenses. If there's a personal portion to it, then you may only claim you know, whatever portion of it relates to business. I'm having a problem thinking of anything right now, but cell phone, I guess, maybe would be one. If you have a personal cell phone that you're using for business as well as personal, how much of it are you using for business and how much you're using it for personal? You might only claim 50% for business or 75%. But recognize that if that's the only cell phone you have, there is a personal portion to it. So you need to recognize that at least. And if you leave it up to CRA to decide for you, they're going to say none of it's for business. So the income statement is based on generally accepted accounting principles. So what classes you pay for be eligible is a question from Monty. And the answer is, if it is 100% for you to do your job for the business. If there's a personal portion to it, you probably wouldn't claim it. So for example, cooking classes when you're not a chef would not probably qualify as a business expense. But if you're going to a seminar, you know, even if you had to pay for this course, that would be an expense. Acting classes for an actor absolutely would be. And I'm going to say that actors probably, you can probably claim a lot more things that other people can't. For example, clothing. If you have to have, well, I won't call it clothing, it's costumes, right? So as an actor, you could probably claim the clothes that you need if you need it to do an audition or to, I don't know if you have to provide your own clothing for the show, whatever. As an accountant, well, I don't wear suits, but if I were expected to wear suits, I wouldn't be able to claim those as an expense because doesn't matter what I wear. It's not part of performing the job. So I hope that helps a little bit. So the income statement is prepared according and generally accepted accounting principles. Basically, I think what we're trying to get at on that one is that for all businesses except farmers, you report income when it is earned, not when you receive payment for it. And you include the expenses when you use the expenses, not necessarily when you pay for it. So for example, if you're invoicing in December for December work, for example, that goes into income in that year, even if don't get paid for it until January. So you may have to include it in income before you get paid for it. But on the other side then as well is the expense side. So if you have a cell phone bill, I'll just use that one, for December, you can claim it as an expense in December, even though you don't pay for it until January. I wouldn't get too caught up on them. And of course, CRA is probably way more concerned about the income side of it being reported in the proper period because they want their money sooner rather than later. So you really do need to keep your receipts, all of them. Even those ones, you get from the gas station that is on thermal paper that is going to fade away after a while. So, I mean, ideally, if you can keep any of those receipts electronically, they will last longer than the 6 months. But it's kind of important to do that. So these are just kind of, these are some of the expense categories that are included on the business statement. Advertising, that could be business cards, that could be headshots, that could be sponsoring the little league team with your name on it. I don't know, anything like that. Bad debts, hopefully you don't have any. Your startup costs, so these are not going to be capital items. It's not going to be you know, buying computers or cameras or anything like that. Those are different animals that we'll talk about. Business tax, fees, licenses, and dues. I don't know if you belong to an organization or association, if you're required to belong to them to do your job. Yeah, business use of home office expenses. I think I will talk about that a bit later, a little more detail. Capital cost allowance. This is the assets. So if you buy a camera, if you buy generally anything that lasts longer than a year, so you're not consuming it when you use it, capital in nature, then you don't deduct the whole thing. You just take a portion of it every year based on the rates that CRE approves. And for the most part, most furniture and fixtures and equipment would be a class 8, which is 20% per year or on a declining balance. So basically you write it off over 5 years. Insurance would be not house insurance, but if you have to have business insurance for some reason. Interest, bank charges, legal, accounting, other professional fees. Maintenance and repairs would apply to your business assets. So if you have to fix your camera, if you have to fix your computer, that would be part of that repairs and maintenance. Probably not going to have management administration fees. Meals and entertainment. So with this one, with meals and entertainment, you need to be entertaining somebody business related. So either a potential customer, client, potential supplier, something related to your business, and you can only claim 50% of it. I guess because I think they think that just because you're out with the potential client or supplier, that you're having fun as well, and that can't happen. So you can only claim 50% of it. Meals when traveling, you can claim them. Also subject to 50%. And probably you would need to be more than 40 kilometers outside of your home area. So if you live in Regina, you would need to be 40 kilometers outside of Regina if you're alone in order to claim that as a meals and entertainment. But if you're traveling north, you know, like northern Saskatchewan to do some scouting, absolutely claim it.
Hey, Sandra.
Yes.
Hi.
Yeah.
My name is Keoth. I'm sorry, I might have joined a little late. I'm just trying to get clarity on if these eligible expenses and everything you're talking about is in context of having like a registered business, or are these things also applicable to being an independent artist?
As in, yeah, no, it would be applicable if you are self-employed. So as an independent artist, you're probably not an employee of anybody,
Right.
right?
So as an independent artist filmmaker, I know there's an avenue for that when you're making your tax returns. And so I don't think most people that are here are probably just independent filmmakers. Some people will probably have some business, maybe a registered business, but so
Yeah.
is this only applying to people who are either self-employed, like as a business, and or have created a business with another person?
It does not have to be like an official business arrangement.
Okay.
It would apply to independent contractors.
Okay, independent contractors. So if I'm a regular filmmaker, I'm not declaring myself as a self-employed person. Would you recommend that is something that you would do when you make your tax return, or is there a different way of approaching it?
Well, there's only two ways. If you're getting paid as an employee, you're going to have tax deductions.
Right.
Like CPP and EI, tax withheld at source, and you get a T4,
Mhm.
and then you're done. You get paid any other way as an independent contractor, you're going to have to do a business statement on your tax return to report the income and expenses. So all of this would apply.
Okay, but
Yeah.
as an independent filmmaker that just doesn't have an incorporated or any kind of other formal recognition or created I'm not a contractor. So if I have all these expenses to make my films as a filmmaker artist,
Yeah.
what can I claim? Are you going to cover that in your presentation today?
Well, these would be the categories that you can claim.
Okay.
Yeah. And so just to step back just a little bit, any expenses that you incur to earn income, you can claim as an expense.
Okay.
So at some point you will have a product to sell, however that might be sold, right? Like if it's licensed, or how would you earn the income? Like where would you get your income from?
From grants, federal
Okay.
and provincial grants.
Okay, so those grants go into income.
Mhm.
Yeah.
Okay.
Yeah.
So anything that is costing me money that as an independent filmmaker, I don't need to formally claim any kind of like business or anything. I am just that. I'm an artist filmmaker. Okay, thank you.
Right. Yeah. CRA wants your money. You need to report it. You need to report the income, which is probably the easy piece of it. The expenses can be a little bit tricky, but.
Can I add something?
Yes.
I think the key point there is the distinction of a sole proprietorship versus any other type, because technically when you are operating kind of business for yourself, whatever it is, I mean, let's say you're collecting beads, that is a business enterprise. And so of course you should keep whatever those inputs are as receipts, like you're saying, and you keep your records in regards to all that, knowing that all of this is going through your tax return as opposed to mine, which is incorporated and I have a totally different filing system.
Right. Yeah, for sure. Any other questions? Clarification from anybody on any of these kinds of things? The other thing I wanted to say on the meals and entertainment, I kind of harp on them, but if you do it right, then with the meals and with the vehicle expenses, if you do it right, CRA is going to look at it and say, oh, you know what you're doing, so there's not going to be anything else for me to find here, so they'll hurry up and move on. So with the meals and entertainment, when you have your receipt and the debit receipt, or however you pay for it with credit card or debit card, that receipt is not a receipt for tax purposes. You need to get to know like list out the meals, whatever was on there, right? Put the name of the person that you entertained on it. Even if it's somebody, if it's a potential client and it turns out to be nothing, or doesn't come through, you don't make a sale or whatever. As long as that person's name is on there, then 2 years later, when CRA comes looking for it, you can say, oh yeah, no, that was a potential client and it turned into nothing, or it turned into a $50,000 contract. So, there you go. And yes, it does include tips. The total amount that is paid is the total amount that you can claim at 50% for tax purposes. Okay. So I'm going to talk about vehicle, and I hope I get to the business use of home as well, because that's probably going to be important. So vehicle use for businesses. Now, this is going to be different for a corporation. A corporation has an easier way of dealing with it. But if you're self-employed, independent contractor, whatever, formally or informally, if you're using your vehicle for business, you can claim it. You can deduct only the portion of expenses that relate to earning business income. So you really want to keep a log, and the log must show the date, the address, the purpose of the trip, and the kilometers that are specifically related to business. From home to work is generally considered personal, so you would not include that. If you don't have an office to go to or a workstation to go to, you mostly do your work from home, then your home is your starting point. That is your place of business. So you can start from there. You're going to need to know the total kilometers the vehicle was driven in the year. So you'll want your opening odometer reading and closing odometer reading, which is going to be January 1st and December 31st, right? The total kilometers for business as a percentage of the total kilometers driven in the year is the percentage of expenses that you can claim. So clearly that rate is going to, the percentage you're claiming can change every year. The more you drive, or during COVID, the less you drive. And the expenses that you can claim then is absolutely everything that does has to do with your vehicle. So fuel, plates, package policy if you have one, capital cost allowance is going to come into play there as well. Interest on a loan if you have a loan against your vehicle, lease payments subject to maximums, car washes, repairs and maintenance, all of it. So keep all of the receipts, 100% of the receipts, and then you just claim the percentage. There's a schedule on the tax return to do that. So the question here, how does this apply to artists with full-time jobs and art practice business? So if you have both, if you use your vehicle for both employment and your business, you can only claim the business kilometers on your business statement. Any kilometers that you drive for your employment, you will either get reimbursed from the employer for that, or have a separate schedule for employment expenses for the expense for the kilometers that relate to the employment income. Does that make sense? It's a bit complicated when you do that, but you would have to, you'd have to keep track of the vehicle usage, one for business and one for employment, and then do the schedule accordingly. Okay, so we've got another question, I think. Let's see if I can make this a little bit bigger. Yeah. If I purchase a vehicle such as electric bicycle or car and use it for traveling from home to my studio for artistic work, contract work, could I claim similarly to more traditional business use? I'm going to say that's a little, I would be inclined to say no. Sorry, let me rephrase that. I would be inclined to say probably not. The work from home to your studio, if your studio is your normal place of work where you do most of your work, then that from home to the studio would be considered personal. So you wouldn't be able to claim any expenses related to that travel. So does that kind of answer those questions or create any more for you? Okay. So the parking they talk about here. Good, thanks. Parking fees. So if you're paying for parking and it is a business related trip, it's either business or it's personal. It can't be both. So you claim 100% of your parking. And if it's a meter, if you're plugging a meter in downtown Regina, I don't know if anybody does that. Then just document it in your log that you put, $2 for parking or $5 for parking, or I don't know, maybe it's a gold bar now. I'm not sure what it costs to park down there. Stephen, did you have a question?
Yeah. One question I have is, I think I use an app for my parking. We've got our parking app here, the whatever it's called.
Right.
And so, I mean, I can spit out, I get a digital copy of that sent to my email all the time. And I can also just spit that out. Those apps have the capacity for you to log, it's logged all of my parking that I've ever done with that app. Okay. So that would be, for anyone who's wondering, a great way to actually have a physical copy, because you can print it off, or it creates a PDF for you that you can submit. Right. Yeah. Yeah. And then you don't have to keep coins in your pocket, because nobody does anymore, right? Yeah. 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 So the parking is 100% business if it's, business parking. And if you need supplementary business insurance for your vehicle, you can claim that sort of increased fee. It has to be set out separately though. So now just talking about apps, to keep track of your mileage, your kilometers, there's a couple of apps out there. I didn't write this down for you. One of it is Everlance, EVERLANCE. And it will actually track your kilometers for you using GPS. And then at the end of the day, then you could just go in and swipe left for personal and right for business. And at the end of the month, quarter, or year, it will print out a report with all of that information that's required. So, I mean, it might cost you a little bit of money to do that, but if you're using your vehicle a lot, I think it's easier to use an app than it is to document every time you get in your vehicle and out of your vehicle. Where you're going, is it personal, is it business? So Sandra's got a question. If I'm using actors paid or volunteer, I pay for insurance. Do I declare all of this? What kind of insurance are you talking about?
It's from ACTRA it's for their, I'm not sure if it's for workman's comp. I believe it's workman's comp. But it's for their safety.
Right, yeah, I would say yes. Yeah, yeah. And even if they're volunteering, you still have to
They're still
pay.
required to have insurance for their safety.
Right, yeah.
At
So,
least that's what ACTRA says. They don't have to be ACTRA actors either. They will
okay.
insure otherwise, but you have to pay for a permit to hire non-ACTRA actors in that case.
Okay. And so do you have to pay that insurance for volunteers as well?
I think that ACTRA says that you should. And having worked as a therapist with injured workers, I think it's important that they have some kind of compensation,
Right,
or they could sue as well.
yeah. So I would say if you're using these actors, whether they're paid or volunteer, in something that you're producing to earn income, whether it's grant income, whether you license it or just sell it outright, whatever, then you would be able to claim that expense.
Okay. I have another question, not necessarily directly related here.
That's
If
good, yeah.
If I've used my expenses, if I'm submitting to a festival, the submission fee, if that festival pays fees, then that's income. So that would be income when the picture is shown. That's a question. Would that be income when the picture is shown, or when they say that they're going to be, you've been accepted? Which aren't necessarily the same time.
Before we start the second round,
how easy is it to discern?
Jeopardy round you.
And it would really only apply over the December, like over the year end, right?
Yeah, when you submit, you pay a fee, and you don't necessarily find out for like 6 or 8 months whether you're accepted.
Okay. Oh, but payment of that fee.
We'll start off with
That's an expense, right?
Yes, it is. When you pay it, yes.
And then the festival may pay you a screening fee. They don't always. That's an income.
Yeah.
And then some of them provide awards. Some of them provide money. Some of them provide prizes. Some of them just say, great, you came in first.
So I would say the cash prizes would definitely be income. The cash awards, sorry. And the prizes. So what kinds of things would that be? What kind of a value would that have on it?
I haven't won a prize. I've won a little sticker, but what I know, Diane has won cameras of various value.
Yeah, I would say if it's a nominal value, don't worry about it. I don't know how you define nominal. If it's significant, then whatever the value is, I would say probably is going to be income. And if it is, a camera, and you're going to use that camera in your business, then you can, if you're reporting it as income, then you can claim the deduction for it as well, through the capital cost allowance.
Great, okay. And that might be the difference, say, than a small camera for taking stills and a bigger camera for doing video.
Yeah, maybe. Yeah.
Okay.
Yeah.
This had a 50-inch stride and traveled only at night.
Anybody else have any other questions on expenses or vehicle?
So if I own a vehicle and being incorporated, And I use my vehicle 100% for business per se, because it's part of the company. It's basically a full, I shouldn't say a full tax deduction, but it's eligible for deduction at every stage, right?
If the corporation owns it,
Yeah.
then it's a complete eligible expense. Where that differs from a sole proprietor, independent, is that if there's personal use to that vehicle, there's a potential for taxable benefit for you, the employee, using it.
Mm-hmm.
Yeah.
Okay.
Yeah.
Now, as a director of the company, not an employee of the company, then
But you work in the company? You are the company?
Well, I am, technically I am the company.
Yeah. Yeah. So, whatever personal use that you would have on that vehicle would be probably a taxable benefit.
And the way my accountant explained it too is that no matter what, I mean, and I've been in business since 2008. We've never ever claimed, even at that, we've never actually claimed 100% of anything ever. And that's just so that we don't flag anything, and includes even like meals expenses. And one thing he told me a long time ago, he said, the way CRA looks at some of these expenses, it doesn't matter what they are. If in an annual year your expenses unreasonably exceed your potential for income, CRA will flag you regardless. So then you're susceptible, opening yourself up to an audit no matter what, because they're looking at what you make, then they're looking at your track record of what you've made. And if all this, you're always claiming more than you're making. Yeah.
It's a problem.
Yeah.
Yeah. So with respect to that, they definitely look at losses. If you're reporting out losses year over year, they are going to look at it and say, is there reasonable expectation of profit? And then it's up to you, the taxpayer, to prove that there's a reasonable expectation of profit, that you have a business plan, that your revenues are increasing significantly, even if your expenses are still more than your revenue. And if there's no reasonable expectation of profits, they're going to say, this is not a business, and so you can't have the losses. So, yeah, that's definitely a problem for them. So I've got a couple of questions here. To what extent can you claim research costs? I would say probably 100%. I think I'd want to have a little bit more information about it and what it's like, what the research is and what it will lead to. But probably it's going to be when you incur the expense. That's when you claim it. And then we've got another one. What about costume expense for making costumes for a film? I'm going to say probably 100% deductible for that. Yeah. And then what about rent accommodations? Now, is that outside of your living where you normally live? If you work in Regina, you go to Saskatoon, or you go north or south, wherever, whatever. Yeah, you can claim the rent or accommodations for that, as long as it relates to what you're doing, to your business, to earning income. So if you're going to film somewhere, then you need to, obviously it's going to take you 2 or 3 days or whatever, then you need a place to put your head down. Absolutely, you can claim that. Yeah, Stephen?
And home office?
I'm coming up to that next. Yeah, okay. So business use of home office. And now this would work in a fairly similar way for a corporation, in that you would claim the same percentage, do the same calculation. So you can deduct expenses for business use of a workspace as long as you meet one of the following conditions. So if it is your principal place of business, that's where you stop. You can claim it if it's your principal place of business. If you have, in the case where you had a studio to go to do your work, then you would have to look probably, or if you were an employee, then you would have to look at the second one to see if you could get home office expenses. So you use the space only to earn income, business income, and use it a regular and continuous basis to meet clients. This doesn't generally, like if you're self-employed and you don't have any place else to do your work, like you don't rent a studio or have office space elsewhere that you go to do your work, then really you're looking, is it your principal place of business? And then you can claim it. So you can claim heat, electricity, water, property taxes, rent if you rent, insurance or mortgage interest if you mortgage, house insurance, security system if you have one, that kind of thing. And it's going to be limited to the square footage of your office space over the total square footage of the living space. So if you have an office space, 10 by 10 room that you kind of set up as your office to do your work, and if you have a space in your garage that you use for storage of equipment, or space in your basement for the storage of equipment, then you could add that square footage into it, into the business portion of it. I'm going to say that you don't want to get too greedy on this percentage. And generally 10% or less is acceptable without too many questions asked. Doesn't mean you can't claim more, but you really have to justify if your percentage is going to be higher than 10%. So depends how much equipment there is, how big it is, and where you're storing it. So for example, if you were storing everything in the garage, and it's not a heated garage, I don't know why you'd store any equipment in there in the wintertime, but you're probably not going to use like all of your gas. Sask Energy is not, you're not going to use any of it for the garage because it's not heated. You will use power, you won't use water, you'll use property taxes. So don't get too hung up on exactly how many square footages I can claim. Just be reasonable. Increase it a little bit to account for, the space that you're using in the garage. But if it's going to be more than 10%, then really you need to justify that. Okay. Yes, Stephen, that good?
So because I'm incorporated, I have a rental that I'm living in, and I have my upstairs space, for instance, where I am right now. Although I do work here the odd time, I have my office downstairs. I have kind of a meeting space, like a living room downstairs, but it's basically just office structured. It's like a think room, and it's got my eraser board and all that kind of stuff. And if clients come, that's usually where we'll hang out. And then I've got another room that's like a library room. It's basically all of my reference material and things like that that don't fit into my actual office. And then I have which I haven't been using, but I probably will start to use in 2022, a very large room that's actually for gear. Like I can fill it right up with a lot of gear, or I could potentially build some form of an animation studio within there that I could just film in all the time for stop motion and things like that. So the question I have is, I have a whole level that I'm not using as a living space in any way, outside of the fact that there is a separate bathroom down there and a miniature kitchenette, and the laundry room, which has always been kind of a concern of mine, although it is blocked off, like it's segregated from everything with a door. So, and it's small, like it's just a little laundry corner. And so what portion of my house that I'm renting, what portion of the costs, utilities and all that could I use, and could I use that almost inclusively, because it is basically now all just work related down there, with the exception of doing laundry.
I mean, you could potentially claim 50%, right? Which would be 50% of the house, right?
Yeah.
But I would really document and document to justify the use of it. So that sort of description and then some.
Yeah, the comparison I'm making would be like if I was a at-home hairstylist and I had a space where I only used it for clients. Is that kind of comparable?
Yeah, I would say so. Yeah.
Okay, and would you recommend photographing it for CRA records so that they know that you're not just making it up if they do come?
Sure. Yeah.
Okay.
Yeah.
I've just thought of that myself, that maybe it would just make sense to take pictures so that they know that it's not.
And that would show that you put some thought into how you determined the 50%. Yeah.
Okay.
Yeah.
Cool.
Okay. So meals and entertainment. Oh, we actually talked about this already. Sorry. Got ahead of myself on that one. The GST, if you are GST registered for GST, then the GST that you paid on your meals and our entertainment, you would only be able to claim 50% of that back as well. There's a couple of things that are restricted in the meals and entertainment. You cannot claim it if it is a membership for a sporting, recreation, or dining facility. So Rough Rider tickets, you can't claim any of it. A golf club membership fee, you can't claim any of it. If you pay green fees and are otherwise meet the conditions, you can claim 50% of those green fees if you have to pay them on top of the membership. Technically, gyms are not.
Another question then. What about something like the Saskatoon Club, which is members only, but I know a lot of businesses that partake in that, either a sponsor or are registered members of. It's like I don't know how to explain the Saskatoon Club. It's a private members club, and they have events, and they have all kinds of business networking events out of there too. I don't belong. It's very expensive,
Yeah.
but
Yeah, if it's a sporting or recreational, then no. Dining, if it's dining, then probably no. I don't know anything about it, so I can't really say if it would fall into that category or not. And I don't know, what does the membership fee entitle you to? Do you have to pay something separate for other events that are there?
yeah, usually you pay for the meals actually. Well, you get a stipend, and then you as a member have to pay for your meals that day, but you get a major reduction. And you get your guests. So basically you pay by the table, so to speak. Plus they also have conference rooms available to rent. So I know friends that use the Saskatoon Club professionally to entertain their clients because they've got a, you know, culinarily, they're out of this world.
Right.
They've got private conference capacities within the establishment. So that's why I'm wondering is, because it has been offered to me to be able to use that facility, but I would have to pay all the fees. So I thought to myself, well, why would I do that if I can't claim it?
Well, so the membership would maybe not be deductible, but when you're renting the facilities, then those would become a business expense. You would be able to deduct them, subject to maybe the 50% rule if it's entertainment.
Okay, thank you.
Yeah. Okay. Okay. Could be that one to death. Contributing to CPP. So you do this on your tax return, and it's based on your net self-employed income. A question here: for persons low budget, would claiming a dinner meeting at Mickey D's be eligible? Absolutely. If you're actually entertaining a potential client there, why not? Yeah, you can. So CRA doesn't really restrict where or say where you can or cannot take people. Yeah, if there's food served and you're paying for it and it's business related, you get it. Yeah. So with the CPP, so your net income, whatever the net income is, you calculate on your tax return the contribution to the CPP if it's positive. The first 3,500 is exempt. You take 3,500 off, and then you calculate the 11.4%. So it works out to be like you are paying the employer's portion and the employee's portion for yourself on this income. And the rates for 2021 and 2022 are going up, and they will continue to go up. And so it just gets calculated into the bottom line on your tax bill. And the maximum CPP pensionable earnings is 64,900 in 2022, 61,600 in 2021. And it takes into account, like if you do business on the side or business and you also have employment income, you only have to calculate the CPP on your self-employed income, where to get you up to the 64,900 in pensionable income. So because you're already paying it on your employment income, and if you get 70,000 a year, then there's going to be no CPP on your self-employed income. Yeah, that sometimes is a bit of a surprise for people that they have to pay that CPP portion. But whether you believe it or don't believe it, it is coming back to you.
But then they get into the water and they're...
Sandra, you have a question?
Yeah,
Comment? Mm-hmm.
I have a question.
Yep.
So if I'm paying myself wage, artist fee, whatever, can I still do that if I'm operating at a loss for that year? I do have other employment income. So I don't know if that would make my total income a loss, but if my professional filmmaker income would be at a loss, can I still pay myself some kind of an artist fee or salary?
And you're self-employed, i.e. not incorporated?
Right.
No, you can't pay yourself. You can't deduct that. You can't deduct. So the net income after expenses is what you pay tax on, whether you use that net income, for personal use. Because if you think about it, if you deduct it, if you paid yourself an artist fee of say $5,000 and deduct it on your business statement, you're going to have to add it back in somewhere else, right?
Mhm.
So it's not really a thing for self-employed people to pay themselves on the tax, on the income statement. Because basically the net income, whatever cash is left over, is your wage or salary or income.
Okay, and when I apply for a grant, I apply for a certain amount that's my artist fee or my salary. But what if with all of my projects, my loss is more than what I've gotten from the grant for my personal income, personal artist fee?
Then you probably would have a loss and wouldn't have to pay tax.
That,
Did I get that? Did I understand
so
that?
I think so. I think that's what, if you understood what I said, I think I understood what you said.
Okay. So you apply for a grant, and in your grant, you come up with your expenses, your budget for expenses, but then you also say, $5,000 for your work.
Yeah,
Right.
would recommend that you pay yourself for,
Yeah. Yeah.
not for, so that you
Right.
have something to live on, right?
Yeah. So you do the income statement based on actual expenses, which is excludes that amount from your budget. All of the other expenses are more than the grant income. You really didn't make any money.
Right. So what I was just thinking then, do I make a statement for the project separate from, say I had 3 projects and a grant for one. So would I be making 3 different statements
Mm,
into my bookkeeping?
no, I wouldn't think so. Not on the, like you might do it in your bookkeeping, you might keep them all separate. But I think you would consolidate it all into one business statement and add them all up.
Okay. Yeah, then you've answered my question to both of those.
Okay, good.
Thank you.
Okay, you're welcome. Any other questions? So there's also an EI program for self-employed individuals that you would elect to contribute to. This is different than the EI program for employees. So when you need to take time away, and when we say time away, we're kind of specific. And I think I will show you on the next slide what qualifies. Then you can get up to 55% of your earnings to a maximum amount. So 638 a week. It's not rich, but if you need it, and it might be good. You have to elect into it, and you have to do that in the year before you want to pay into the program. Once you've drawn on the EI program, you always must pay into the program forever and ever. Amen. So you want to consider in 2022 on the maximum insurable earnings of 60,300, you would pay $952 to get to be insured for that year. But it applies only for maternity benefits, parental benefits, which is another word for paternity, sickness benefits, compassionate care, and I think so that's if you're needing to look after a loved one, or family caregiver for children or for adults. I don't know.
Hour underwater, and I'm limited to certain depths.
Maternity benefits might be good. The rest of it, I don't know. I don't actually know any self-employed individuals that are actually contributing to this program. That's not true. I know two, and they took it both for the maternity benefits. But they will be paying for the rest of their lives into the EI program. And I mean, the potential for, you know, for family caregiver, I guess, increases. So there's that option. But what it does not allow you to do is if you lose your job for whatever reason, you're in complete control apparently about how much you work and don't work. So that's not covered. It's just these specific ones. So the question, since we're talking about grant-based income, how should grants received from outside of Canada be recorded? So whatever currency you are paid in, you need to convert it to Canadian. And you can do that either at the time that you receive the payment or at the time that you render the services, or you can just do it as use the average exchange rate for the year. Yeah, any of those, one of those. Okay, good. So tips to dealing with CRA. I'm getting close to the end of my slides. So keep accurate and detailed records, keep the records, keep the records, keep the records. And if you are selected for audit and you're just really not comfortable with it, get a tax professional to help you. If you work with an accountant or tax preparer anyway, get them to deal with CRA. Be the intermediary to ask you, get the information that CRA thinks they need. Only provide them with the information they ask for. Don't try to be helpful. And respond to all questions and make the process easy and review the findings. When you ignore CRA, life gets more miserable for you. So if you just keep in contact with them and try and get them the information that they're looking for, they are way more patient with people. So don't ignore them, keep your records and get professional help if you're inclined to do that, or if you don't really want to deal with them. So then I just have GST and PST to talk about. So GST, if you're registered, if you generate more than $30,000 in income, taxable income over the previous 4 calendar quarters, then you're required to be registered for GST. If you're less than $30,000 in the previous 4 calendar quarters, then you're not required to be registered, but you can volunteer to register. Here's the difference. You're registered for GST, you collect GST on your sales, your revenues, the taxable sales, even if that tax rate might be 0%. For example, if you're selling a product outside of Canada, that would be 0 rated. You would, the tax rate would be 0. If you were selling the same product in Canada, you would charge 5%. You can recover the GST that you paid on those expenses. So if it's a labor intense kind of good or product or service that you're doing and not a lot of expenses, you're probably not going to get much GST back out of it. But if it's, if you've got lots of purchases of taxable supplies that goes into making this product, then you may want to consider voluntarily registering for GST so that you can recover that. You have to stay registered for 1 year before you can close your account if you don't like doing the paperwork on it. And you would file the GST return. For most people, it would be on an annual basis, but you could elect to do it on a quarterly or monthly basis. And it depends how good you are at saving money and and protecting that money and keeping it available for the entire year, whether you want to do it quarterly or annually. Sorry, my voice was just going there. Everybody who operates a business should have a PST number, even if you're providing a service that you don't collect PST on. And the reason is that if you purchase assets for your business that from a vendor who does not collect Saskatchewan PST, then you should self-assess for that PST. And you would have the return in order to do that. So if you're not collecting PST, you have a PST number, you're probably going to file on an annual basis. If you have nothing to self-assess on, then the return is going to be all zeros, and you file it and they're all happy. Yeah. And that is the end of my formal presentation. My email is on there. If you have any questions, want to shoot me an email, certainly feel free to do that. If you got questions now, want clarification, I'm happy to have a discussion on that.
I have a question.
Yes.
How would I report paying people through like honorarium for interviewees?
Mm-hmm. You would claim it as an expense. On the business statement itself, there's other lines for, you can make it up, or whatever you need it to be. So you could, if it made sense to you to put honorariums in a separate category. Depends how much it is. I might put it under supplies. I know that seems kind of odd, but for sure you can claim it, and there would be a spot for it on the statement.
What about grants that were meant to pay for other people, not for me, but it, yeah, like a mentorship grant that had a specific purpose, but it came directly to me, but like it wasn't for me.
So the grant contract would probably be in your name. So you would have to report that income, and then you would just claim the expense for the amount that was paid out. Does that make sense?
Yep. And what about gifts that are for interviewees, along with their like honorarium? You would gift somebody, but that like would be an expense, right?
Yeah, I would say so. Yeah. Okay.
And if it was like, say, I was gifting interviewees ribbon skirts, but I had to buy it off somebody, but they don't know how to do, like, say, invoices or something, and I only have like a e-transfer as a proof.
Ideally, if you could do up a receipt or a statement of something that says that you paid them for this and then they signed it. I don't know. I mean, that would be ideal. If you could get something that even looks like a receipt. I guess it would depend on the value too. Like, I don't know what the value would be of them. If you can't get a receipt, I would just document it then, and not just rely on the e-transfer. But say, I purchased these from this person, this is what I paid them, and this is what I used it for. I'm not going to guarantee that would work, but I would do that. I would recommend that. So just so that you have some documentation on it. Yeah. Does that sort of answer all your questions, Tristan? Or at the moment?
Yeah. So there's no tax credits for Saskatchewan, right?
For
Not even sure how that works either. Like if you make a film in Saskatchewan primarily.
I think they got rid of those a while ago.
Yeah, and for Saskatchewan, right? But
Yeah, I think, yeah.
I live primarily in Vancouver, and I was just in Saskatchewan for like more than half the year, probably.
Where's your principal residence? Where do you ordinarily reside? Sorry?
Vancouver.
Yeah, so you would probably go on BC rules. You would be considered a resident of BC for tax purposes.
Yeah.
So if there's any of those credits available, but I don't know what the rules are around it either, right? Like, I don't know if you have to actually do the work in BC, probably. So any work done in Saskatchewan, I don't know would necessarily qualify, but you could check out what the rules are with the BC, if there's any credits, and see if they apply.
I can answer that. There's no current availability for a tax credit that is usable in, so we don't actually offer any tax credits at all. You have to apply for an interprovincial co-production. There's a whole parameter and a whole framework around that. It's not as simple as saying I'm making a film, I'm from BC and I want to shoot in Saskatchewan. It doesn't actually. Yeah. So I would, if you have a problem with tax credits and questions in regards to that, not only in Saskatchewan, Creative SAS is the entity that has any, we don't have a tax credit, we have a granting system here. And so we have allowances for film production here that then have tax implications. And those could be interprovincial and co-production wise, but from a British Columbia perspective, you would probably, because you're a resident of British Columbia, you wouldn't even qualify for any portion of not only a tax credit. If there was a tax credit, you wouldn't qualify for it here. But you would also not qualify for it if it's just the grant system the way it is right now. You can't just apply for Creative SAS funding if you're not an actual resident of Saskatchewan. So.
Yeah. And any credit that might be available in BC probably wouldn't apply to any projects done in Saskatchewan, would be my guess. Yeah.
Well, there's some special allowances in regards to that, but like I said, those are they're agreed upon co-production, interprovincial co-productions, and there's a whole framework around that. Mm-hmm. Saskatchewan, you have to meet so many check boxes in order to qualify for any of the Saskatchewan portion of that spend. And And it's the same the other way around. So let's say you lived in BC, you shot primarily in Saskatchewan, and most of your labor and costs inputs were in Saskatchewan, but not in BC. You wouldn't qualify then for the BC tax credit either.
Yeah.
So it's kind of, what I would recommend is you go to the film commissions in British Columbia, as a British Columbia, or out of province, wherever it is, be it BC, Manitoba, New Brunswick, doesn't matter. And then also here, you know, and Creative Sask, they're very helpful.
Good. Great. Thanks for that. So a couple of other questions, I think, here. Where would be the best place on the expense statement to put location fees for shoots? Again, that one I would, you know, potentially maybe put it to supplies. Supplies to me is a catch-all for where it doesn't fit anywhere else. Or you could have a separate, if it's a significant number, you could use one of those miscellaneous, blank lines and put it in there. So any grants, contracts paid would act as an income, and we just make sure to keep receipt expenses made from those incomes. Absolutely. Yep, that's right. If one spends time in 2 provinces over the year, 50-50, sometimes 60-40, what would be a good way of determining which province to do your taxes in? So the actual rule is where you are considered a resident at December 31st is where you file your taxes for the year. So you could move from Saskatchewan to BC on December 31st, and you're a BC resident for that entire year. Yeah, so that doesn't always give out the bigger picture, and that's true, but that's sort of where you determine what taxes you pay in the year. Yeah. Alrighty. Any other questions out there? I've come to the end of the questions on the chat. Can you still do taxes in a place you choose instead of the place you're at on the 31st? Not really. I guess if you have a driver's license, that would be a good indication of what province you are resident in. In healthcare would be a really good indicator of where your residence is, which health card you're using, what province is paying for it. Yeah. Yeah. Sorry, was that an accident, Sandra?
Yes,
Okay.
thanks.
I was waiting for the question and nothing happened.
That was an accident. Thank you.
Okay. Okay. All right. If nobody has anything else, I'm going to say feel free to give me shoot me an email. I think it's on there if you want to see it. And I'm happy to answer any questions that I can help you with, and that'd be awesome. And I'll hand it back to Louise.
Well, make sure my mute's off, but thank you so much, Sandra, for that and answering a lot of the questions that we had throughout. I don't know if you want to give people your info. Oh, right there at the bottom.
Yeah.
If you have any more questions, or if maybe they want to take you in as a tax representative.
Yep. Yeah, we're happy to help you. I'm happy to answer questions, or if you want some help with your tax returns, we can certainly chat about that too. Yeah.
And Yeah, so if there's no more questions, I want to thank everybody for attending and participating in all the wonderful questions. And thank you, Sandra, for answering. And it was a good presentation.
Good, thank you very much.
One last question.
Sure.
I see, oh, okay, I see your email there now. Is this presentation going to be provided through Filmpool?
Yeah, we recorded it, so it'll be on our, I think it's our YouTube that we'll have it available on.
Awesome. Okay, great. Thank you, Sandra.
Okay, you're welcome.
Thank you, Filmpool.